Mortgage Minute today, being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. 800-306-1990. Let's take a look and see what's happening in the mortgage world right now. We will take a look very first at where are the markets? Well, S&P 500 up 10.95. U.S. 10-year Treasury down 5 basis points. Mortgage-backed securities, they're up 31 basis points. That means interest rates are improving. When the bond goes down, the yield, when the bond goes up, the yield goes down. But like I do every morning, I like to give you where the interest rates really are. This is based on yesterday's number, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Where did the loans lock at yesterday? If you want to know that, well, we've got that information right here for you. Again, these are loans that were locked yesterday. Conforming rate loans locked at 5.344. 5.344 now. First trading day of the year, January 3rd, 3.409. 3.409. So being at 5.344, yeah, it tells you that you should have locked earlier. Well, we were telling you that all along. 3.4. So it's almost 2 percentage points higher than it was back then. Now, you can't get back to those rates. Now, you can get close. There are strategies that we're using right now with some of our private clients to help them get back to close to those rates. Can't get exactly there, but there are some strategies to help with that. But the question becomes, why is that happening now? What's going on? Well, we've got existing home sales that came out. Measures closings on existing homes showed that sales were down 2.7% in March at a 5.77 million annualized pace. This likely measured activity in January and February, including some of the move higher in rates, but not all of it. On a year-over-year basis, sales are only down 4.5%, which is still quite strong considering higher rates, higher home prices, and tight inventory. Now, I want to share that number with you again. Year-over-year sales are down 4.5%. Because I'm watching some characters on social media and they're saying, well, there's no such that inventory is not tight because we've sold so many properties. Well, sales are down 4.5%. Not for a lack of buyers, because I hear about buyers all the time having trouble getting their offers accepted. Well, we have a few strategies to help with that. If you're having trouble getting your offers accepted, give us a call at 800-306-1990, 800-306-1990, and we'll see if we can help you out. Speaking of inventory, it did increase almost 12% from February to 950,000 homes for sale, which is down about 10% from last year. This is the normal inventory build that we discussed last month that occurs every year during this time. There is now a 2-month supply of homes, up from 1.7 months, when 6 months is considered balanced. Speaking of the imbalance of supply and demand, homes were only on the market for 17 days in March, down from 18. 87% of homes that sold were on the market for less than 1 month. This should continue to be supportive of home prices. So we are going to see the rate of acceleration should slow. The rate of acceleration should slow. That does not mean prices will drop. It's like if you're driving down the freeway, and I do not recommend going over the speed limit, but just say you're driving down the freeway at 80 miles an hour, you see a police officer on the shoulder, and you slow down to 70. Does that mean you're going backwards? No, you're just going at what the speed limit might be. So think about that. Median home price reported at $357,300. National number. We are significantly higher here in Southern California. That's up 15% year over year. This continues to get skewed by the mix of sales. Sales on the lower end are down sharply, while sales above $500,000 are much higher. First-time home buyers have accounted for 30% of sales, which is a nice move higher from 29% in the previous report and 27% 2 months ago. Cash buyers increased from 25 to 28%, while investors purchased 18% of homes, down from 19%. Foreclosures and short sales account for less than 1% of all transactions. MBA released their mortgage application data last week, showing purchase application volume decreased 3% last week and is down 14% year over year. Put the cash buyers in there, those not taking out a mortgage, and they're down about 7%. MBA reported 30-year fixed rates at 5.2%, which is the highest in practically 10 years, 2% higher than this time last year. Now, again, that's the MBA numbers. Those come from last week. I already told you that OBMMI is telling us rates yesterday, 5.344. And, of course, we share with you every day. Think about this. It went from 5.27 on Monday to 5.34 on Tuesday. Thankfully, as I reported a little bit earlier, the bond market is showing green today. Bonds are up, which means rates are down so far this morning. We'll see what they do on the locking side later in the day. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.